Make in India, Smart City, and the core of all these initiatives is technology. So we expect government to invest a lot more in technology, and that's going to further increase the demand for the IT BPM sector, which is a great news for this industry. So if I look at the global trend, last year we saw the global IT BPM spend has gone up by about 4.6%. But this is despite the volatility that we saw amongst us. Not all economies are growing at the same rate. Some economies are up by about 4.6%. But this is despite the volatility that we saw amongst us. Not all economies are growing at the same rate. Some economies, some developed economies are actually laggards in terms of growth. So we do see continued volatility in a macroeconomic scenario around the world. But despite that, the IT spend has gone up by about 4.6%, IT BPM spend. And if I look at the global sourcing, it's almost a double of that. 9 to 10% is the increase that we saw globally in global sourcing. And India has been the beneficiary of tapping much of that incremental growth that we saw as far as the global sourcing scenario is concerned. And also about 150 new GDC centers are set up in 2014. 28% of them have come to India. Right? And solutions based on value up and cost down. This is what I mentioned about the engineering, R&D, product development. These are sectors that are growing. Cost-based offshoring opportunities. So this is the crux of where we want to share about the industry's performance during the current financial year. It is expected that the industry, we will come close to about $150 billion, right? 146 to be precise, compared to 130 that was there last year. This is almost 13% growth compared to last year. We are actually given a guidance of 13 to 15%, so we have come closer to the lower end of the guidance. And so still, nevertheless, it's a phenomenal growth given the base that we were already 120 plus billion last year, right? So overall, we have very, very healthy growth to report to, and we all should be very proud that what as a country we have been able to generate through the IT BPM sector. Industry revenues, total of 132 billion, growing at 11%. So if you really look at the breakup, the export revenue is almost touching 100 billion, 98.5 to be precise, is the export revenue. And if you look at the e-commerce revenue, which is the fastest growing sector, last year it was around 10.5, this year it has grown to about 14%. So overall, very healthy growth. And as you all know, we had shared a 2020 vision of 300 billion by 2020. And we are very happy that we are halfway there. And if the growth continues this way, we are very, very confident of, sort of meeting the 300 billion target by 2020. And also it's important to note that BPM sector, which is accounting for about 28 billion, is the largest in the world, right? So if you look at even the sub-segments of NASSCOM, whether it is our ability to move up the value chain through engineering, research and development, and product engineering, that sector is growing more than the industry average. BPM sector, we are number one. We are attracting a lot more global in-house centers to be set up in India. That sector is also growing. So overall, we have very balanced growth that we see, which is a very healthy trend as we look into the future. And in terms of employment, as I mentioned earlier, the industry currently employs about 3.5 million people. Just 230,000, 2.3 lakhs were added during the current year alone. And it is not just that, you also need to have the multiplier effect. So overall, the employment generation through IT BPM sector continues to be very robust, healthy. But one driving factor is we also need to focus on skill so that, we can grow even faster in the future. And the employee growth supplemented by non-linear models. One of the things that you will notice is a 7% growth in employment, whereas the incremental export revenue is almost 11%. That's mainly because we are able to bring in a lot more efficiency in the way we deliver services, either leveraging platforms, leveraging technologies, or undertaking projects based on business outcome. Right? So we are looking at more and more non-linear revenue model, but that doesn't mean that the employment opportunity is going to come down. But if we reskill ourselves, if we create newer platforms and offer value, this sector has unlimited potential. So that's what we need to focus on going forward. And HR priorities are also on right job, right candidate, prepping the digital ready talent. So digital transformation, even from a skill point of view, is very, very important for us to continue to generate the type of employment opportunities and grow the sector. So this is really the milestone that we need to celebrate, almost touching $100 billion in terms of export. Robust industry growth meets NASSCOM guidance, which we mentioned earlier, and so 13 to 15% was our guidance. We did close to 13%, we saw in the lower end of the guidance. But if you take the constant currency, because we also saw big currency shift, which is actually took away part of the accomplishment from a revenue point of view to the tune of almost 0.8%. So if you take the currency, on a constant currency term, we grew by about 13%. So if you take the currency fluctuation into account, we grew by about 12.3% during the current year. And the central to the growing opportunities is the opportunity that the digital transformation presents. We continue to do well. It is not just about cost savings and the traditional offshoring that we are all used to, but we are also able to win lion's share of the business in the emerging technology areas, particularly leveraging social mobile analytics and cloud, more recently Internet of Things and other sensor-based devices. So the digital revenues, SMAC as we call, and big data analytics is contributing about 7 to 10% of the industry revenues. Digital skills, we are able to generate what was about 20,000, now we are about 150,000 people with the digital skills. And digital investments through some of these startup ecosystem has also multiplied several times during the financial year. So overall, we are keeping in step with the needs of our customers. We are keeping in step with changes that are happening there, and we are able to leverage some of these emerging technologies to continue to maintain the growth momentum that we have seen in the past. Doing more with less, agility, efficiency are key priorities, as this slide is very self-explanatory. Fixed price contracts, because customers worldwide are putting a lot more trust and confidence in our ability to deliver business output, business outcome. So from there also moving away from time and materials contract to more and more fixed bid or business outcome based contracts. So you can see from 38% in 2009, it has gone up to 48% today. And the growth in patents, which is very, very important. I still remember, 5-6 years ago, when in one of our offsites, we were talking about how we were compared to other countries in terms of intellectual property and patents. And that scenario has changed dramatically in the last, I would say, 5 years. From what was about 150 patents in 2009, we have more than 1,500. I'm sure this number is going to go exponentially looking into the future. Global hiring, the India-centric companies are not just hiring in India and sending people, in order to work closely with our customers in other geographies. We are also increasing our hiring in local geographies so that we can understand the local needs better, thereby we can deliver solutions better to our customers. So global hiring also has been increasing steadily. And because some of the complexity of the solutions that we deliver, it requires our presence closer to the customer to understand their business challenges. So the on-site revenue also has been steadily increasing. This is very important. This is one sector which really tells the story about our ability to move up the value chain, software products. So what was 5.4 billion in 2014? This has grown almost 12% to 6.1 and continues to grow. And we see more and more new technology products coming out of the Indian ICT BPM staple, which is going to really drive many of the business processes for customers, not only India, but also overseas. So this is another important sector for growth for the industry. The startup ecosystem, as I mentioned earlier, this is really the poster child of the industry. There's a lot of attention in this space, and it's very, very healthy to see that almost 800 to 900 new startups are coming up each year, and we are about 3,100 startups that are currently in India, and they are able to attract very healthy investments from the venture capital firms as well as the private equity firms, and there are over 500 deals that are actually funded by 62 active angel networks, both regional networks, city networks, as well as national angel networks. And as an industry, we also are supporting many incubation centers. NASSCOM is working with various state governments in actually setting up incubation centers, incubation warehouse, to really help some of these budding entrepreneurs to get started. And we provide mentorship. So there are a lot of activities for promoting the startup ecosystem, both from NASSCOM as well as from the government, as well as through venture capitalists, angel network, and private equity firms. And some of these startups that are focused are all on emerging technologies. We have about 35 startups focused on Internet of Things, data analytics, and social mobile and cloud, hardware-based. Education is also a new sector that's attracting, because we see a lot more opportunities for online education, because that's a very, very important area. And providing online education is really helping us to reach out to more students, both at school level as well as at the college level. So education is a big thrust area, leveraging technologies to deliver content to the people in need of quality content for education. So overall, a very, very healthy story. So just to summarize, I think Shekhar will continue with the outlook for the future. So we've done very well during the current year. Very happy to report that we're touching the 100 billion mark in terms of export revenue. Very happy to report that 50 billion of that is already coming from the domestic sector, which is growing faster, showing very healthy signs of growth. Good employment overall, 230,000 jobs added this year. A very vibrant startup ecosystem which augurs well as we look into the future. So very happy to report a fantastic set of numbers for you during the current financial year. Thank you. Shekhar, may I request you to take forward with performance of various councils and the guidance for the next year.
Thanks, Sudha. Good afternoon to all of you again. You just heard Chairman Chandra take you through some of the industry indices, some of the global trends, and how that has translated into the industry performance during the current year. I'm going to take you a little bit through what's happening on the domestic landscape and what is the prognosis for the year ahead. Undoubtedly, the big story in the domestic segment has been the rise of the e-commerce, and it's had a phenomenal growth rate of close to around 33% has been the growth in e-commerce in the domestic revenues. We've seen significant growth in some of the other segments as well. We've seen the software products, as was just mentioned, growing at close to 12%. And we've seen also the IT services growing at 10.2%. And overall in the current year, the growth in the domestic revenues in dollar terms has been around 14%. So the domestic segment has also seen a significant amount of investment going into all the various sectors. You saw that even in the context of the startup segment.
All right, that is of course the outlook coming from NASSCOM for FY15. We just heard from the President saying the industry will achieve a growth of 13%. That's versus a guidance of 13 to 15%. And we have an export outlook for FY16. 12 to 14% is what we're hearing. But good growth coming in as far as e-commerce goes. E-commerce expected to have a guidance of 13 to 15%, and we have an export outlook for FY16. 12 to 14% is what we're hearing, but good growth coming in as far as e-commerce goes. E-commerce expected to have a very robust growth last year and this year going forward. That's the commentary coming in from NASSCOM. We'll continue bringing you more views from there. For the moment, let's take a quick break on the